Ladies and gentlemen, I welcome you all to the H2 FY24 post-earnings conference call of Virtuoso Optoelectronics Ltd. Today on the call from the management we have with us Mr. Sukrit Bharti, Founder and Managing Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainty. Also a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the half year and the year that went by, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir. Hello, Sukrit, you can go ahead, please.
The recording has stopped.
Hello, Sukrit.
Hello. Vinay, am I audible?
Yes, sir, you're audible. Shall we start the recording? You're ready to begin?
Yes, please. Yes.
Yeah. So I've given the initial introduction. I'll just start the recording. You can quickly brief about what's happened in the last half and the full year. Yeah. I'll just start the recording.
Right.
This meeting is being recorded.
Yeah, Sukrit, please go ahead.
First of all, very good afternoon to all of you, and thank you for taking the time for being on this call. So Virtuoso last year had a very good year principally, where we have grown probably in almost every segment. The overall yearly growth is almost 50% in terms of our top line, and we are happy that the AC business has grown, the lighting business has grown, and we've also entered a couple of new categories in business. So just to update you, division. So in terms of numbers, of course, you must have gone through the presentation, but net sales we've grown 57.5%. We have grown from 337 crores to 531 crores. And on EBITDA, we have grown 53.6%. So EBITDA last year stood at 52.6 crores, up from 34.2 crores. So we believe we've got better EBITDA than we had anticipated, so which is a good sign. PAT margins, of course, are under, is about 2%. That is because the depreciation is higher. So we are so far following the WDV depreciation, which is why initially the depreciation is high, and then of course it reduces. A lot of our competitors are using straight line depreciation, which is why their depreciation numbers are lower, and which improves the PAT. But overall, I think as far as EBITDA is concerned, I think we've done a good percentage this year. Business-wise, lighting business has grown, and we've added new customers in lighting. We've recently started working with Great White and Gold Medal also, as far as lighting is concerned. On the AC business side, AC IDU has grown. Also, ODU has grown quite a bit because this was the first full year for outdoor unit. And next year also we have very strong projections in both IDU and ODU. We are also looking at increasing our capacity by about 20% in ODU in the coming year because of increased demand. And last year we are happy to announce that we got into water dispenser as a category. We also started exporting water dispensers. So this was the first direct export that we have now involved in for water dispensers. And last year we had started doing a capital expenditure for making commercial refrigerators in-house. That capex is expected to get commissioned in the second and third quarter of this year, and from fourth quarter onwards we are expecting the revenue to start coming in from commercial refrigeration market. We are also happy to share that we've tied up with some good customers on the commercial refrigeration side, and we hope that by next year we will reach a capacity utilization of 50 to 70% of the capacity that we are creating this year. Apart from this, on the component and backward integration side, we are, as planned, we are improving our backward integration for air conditioners, lighting. We are also, this year, we also plan to increase our in-house remote manufacturing capabilities, which was low last year. And we are getting into some smaller components which are required in heat exchangers like brass parts. There are certain bends that are required which are currently imported. All those components also this year we plan to do in-house. So overall, I think we had a good year and we achieved the numbers that we had set out for ourselves. In the year ahead, we hope to continue a similar growth number, and we hope to add more product segments, especially commercial refrigeration, because I think that can be a large segment for us over the next 2-3 years. Team-wise, also as a team, we are growing, and now we have added a lot of new members to the team at different levels, which is helping us sustain the growth overall. This year, we also plan to start a unit in Chennai for making components for air conditioners, because some of our customers are wanting us to make certain parts locally for them in Chennai. So a unit in Chennai is also planned in the current financial year. So that was a little bit about what we've done. I think we can open the floor for questioning.
Sure. All those who wish to ask a question, please use the option of raise hand. In case you are unable to ask, you can put the question on chat and we'll ask on your behalf. Request participants to raise hand, please. We'll take our first question from Harshil Bihani. Harshil, you can go ahead.
Hi, can you hear me?
Yes.
Yes.
Yeah, first of all, congratulations on good set of numbers.
Thank you.
My question is, in this year, how much PLI benefits have we received and how are we recording in the P&L?
So we are recording on the accrual basis. So last year we accrued 6 crores, but we received 3 crores, but just in the month of April, 2-3 days after 31st of March.
Okay, so are we recording above EBITDA? My question is, does the EBITDA number...
EBITDA numbers include, they are part of revenue. So we are taking
part of
revenue.
Understood, okay. And what is the current capacity utilization in all the segments?
So capacity utilization in IDU continues to be at about 75-80%. ODU capacity utilization for last year was about, on an average, about 50%. It is expected to go up to almost 75-80% this year. And for lighting, we are at roughly 70-80% capacity utilization. But there we are constantly improving our capacity, and we are also maintaining the utilization around the same number.
Okay, and water dispenser?
Water dispenser is a fungible capacity with ODU because we are using the same infrastructure. So dispenser capacity and ODU capacity are fungible for us as of now.
Understood. And our last question is, what would be our targeted capex for FY25?
We almost about 60 crores.
That includes the Chennai capacity which you mentioned.
That includes Chennai capacity, yes.
Okay, thank you.
Thanks, Harshil. We'll take the next question from Ranodeep. Ranodeep, you can go ahead. Ranodeep Sen, you can unmute and ask a question. So in the meanwhile, there were a few questions that were asked to us from investors. Could you throw some light on the components that you're doing for toys? What exactly are this? Is this an extension of your existing activity? Hello? Sukrit?
Sorry, you're not audible.
Am I audible now?
Yes, but very low.
Oh, okay. So there was a question from some investors
Okay,
regarding the toy components that you're doing.
correct.
What exactly are these? Are these an extension of your existing activity, or is this something separate that we are doing?
It is an extension of the regular activity. We are, I mean, whatever capacity. So we were approached by a toy company manufacturing toys in Nasik, and they are a holding company of a Hong Kong-based entity, which is supplying toys to the top 2-3 toy companies in the world. So we are making certain components for them, and we are registered as, and we are registered. We are registered already for 2 toy companies as tier 2 vendors for their parts. So we are starting with plastic parts, but we will also add electronic components soon, probably for toys that we supply to them. This is, of course, currently we are using the spare capacity that we have in the existing infrastructure to service this requirement. If it grows very rapidly, then we will probably look at having a small dedicated capacity for it. But as of now, no plans for a dedicated capacity. We are using our spare capacity for their requirements.
Yeah. We'll take the next question from Urmi. Urmi, you can go ahead.
Sir, good afternoon. Can you hear me?
Very good afternoon.
Sir, my question was, what is your growth outlook for FY25 and FY26? And what are the growth drivers, if so? And also on the EBITDA margins, what is your outlook for these 2 years? Thank you.
So growth, we are looking to continue the current growth trend of 40 to 50% year on year for the next couple of years. I mean, 40% on a conservative level, we are hoping to grow for the next couple of years. And the growth is going to come from 2-3 areas. One is, of course, growth in the commercial refrigeration segment, which is a completely new vertical. Water dispenser also is going to probably start building from this year, and we will get good numbers in water dispenser next financial year. This year, the growth is going to come from IDU, but a major chunk of growth will come from ODU. And as far as EBITDA is concerned, we are expecting EBITDA to be in the range of 8.5% to 9.5% for the current financial year.
Okay, thank you so much.
Thank you so
much. Am I audible now?
Yeah, Ranodeep, you can go ahead.
You're audible.
Thank you. Sorry, I missed the first part of the call. Just wanted to check. We were on the finalization stage for finalizing a prominent client for our refrigeration business. Have we finalized that?
We have, but once we start, I mean, sign off. So we are already in development and we are doing the sampling phase with the customer. But once we have it on paper, then we'll share it with everybody. But we have 2 anchor clients for the business.
Sure. I also wanted to check. There was a lot of news about the shortage of ACs during the peak of the summer season that we just witnessed, and This was in the back of many summers where these manufacturers missed out on the sales due to some reason or the other for the last 3 years. Now, How did it impact us? I'm sure it impacted us positively, and that shows in the revenue. But are we now looking at, because I remember you had mentioned that we will look at beyond Volta only when they say that our appetite is, kind of exhausted with Virtuoso. So is there any school of thought around those lines, or we are seeing increasing traction at Volta's level itself?
We are seeing increasing traction at Volta's itself as of now. So this year we'll continue with the same strategy.
Sure. And just one last question. I think we are positioning ourselves as a manufacturing giant, right? And hence we've done great efforts in terms of diversifying our business is like I think the long-term plan is to keep ACs only at 50%. Are we entering into any other sectors in near term, or are we restricting ourselves to the 5 sectors that we are targeting at this juncture in 2024?
We are, like I said, air conditioning, electronics, lighting, commercial ref, and components is there. We are also exploring washing machine as a segment. So we might enter washing machine also either towards the end of this year or maybe next year, but it is not confirmed as of yet.
Sure. And just an add-on to the question which some of the earlier participants asked, this is on the toy business. There's a PLI scheme for toys which is expected and awaited for the last 1.5 years, and it is due. Are we going to be participating in the same?
I am aware. I am also waiting for it for the terms and the conditions for that to be disclosed. If they are disclosed, then we will evaluate it. But we are open to participating in it.
Sure. Appreciate the
there
response.
Is also,
thank you.
I mean, I understand there's also a possibility that the AC PLI scheme might get extended because they have some funds remaining. And if that happens, then we will apply for that as well.
Sure. Appreciate the responses and wishing you all the best. Thank you.
Thank you so much.
Thank you. We'll take the next question from Ankur Gulati. Ankur, you can go ahead.
Hi, Sukhrit. Good to connect again.
Hi, good afternoon.
Listen, I think in March at Captify's event, you said that if AC market grows at 15%, you will probably have to add more capacity by FY25. So how do you see that playing out?
So ODU, like I mentioned earlier, we are already planning to increase our ODU capacity because that projections we already have. So ODU capacity we are increasing. IDU we have to wait for some more time to see if we need to increase that capacity.
And this 60 crore capex is now coming in this year because of that ODU.
Because of ODU, some new tool development because we are adding that range. It is also for commercial ref and also the Chennai unit that is planned.
Okay, so now that also means that your ODU capacity utilization will start inching up now, right? So is it fair to assume that you can now start hitting 11% EBITDA on ODUs?
So EBITDA with ODU is lower than IDU because the value addition in the overall product is lower. Yep. So ODU is expected to put pressure on EBITDA. But I think the other verticals like commercial ref will probably balance it out slightly. But overall EBITDA, that is why we are expecting it to be somewhere between 8.5% and 9.5% for this year.
Yeah. No, Sukhrit, again in the same conference, one of the views you had was that as capacity utilization for ODU goes up, you can start hitting 11%.
No. We said, I think there was some communication gap. IDU has a better EBITDA than ODU because the overall value addition in the product is higher. As ODU numbers increase, it will have a bearing on the EBITDA. Commercial ref has a better EBITDA. Lighting and commercial ref has a better EBITDA than AC business in general. So once commercial ref increases, then EBITDA will have a positive impact.
Understood. And can you give more color on this whole toy segment? Where are you guys in terms of?
So it is still a small opportunity for us that we are also exploring. We are trying to understand the business because it is a new vertical for us. But if there is opportunity, we want to pursue it because I think it is a growing segment, and all the processes and infrastructure required for toys is very similar to what we already have. So if there is any scope, we'll grow in it. But as of now, it is still very small for us.
And just to understand, these are more plastic mold based toys, or you want to get into some
so
sort
plastic molding and electronic circuits are two areas.
Okay.
Because ultimately there are only two major components: plastics and the electronics which go inside toys.
Understood. So I understand. Okay, I got your EBITDA margin guidance. How is PAT expected to pan out in this year? Is it still going to be 2.5% or slightly higher?
So PAT between 2 and 3%. We are contemplating if If depreciation, if you want to go into a straight line depreciation calculation, then PAT will go towards 3%, maybe slightly higher. But if we continue WDV, then about 2%.
Understood. And last question, what is the number of shares outstanding once you assume all the warrants are converted?
Vibhuti, what are the current outstanding shares? I don't remember the exact number. I'll give me 5 minutes. I'll check and get back to you.
Sure. All right. All the best and thanks for your time.
Thank you.
Thank you. We'll take the next question from Manan Madlani. Manan, you can go ahead.
Yeah, hi sir. Good afternoon and thanks for the opportunity. So I had the follow-up question on ODU. So as you mentioned that if we can hit the utilization rate of 70-80%, let's say, so is it possible for us to hit the upper range of the OPM, which you guided earlier, 8 to 9% was the range, if I'm not wrong?
So that depends a lot on how the off season goes, because if the off season is very good, then the utilization goes up. But in season time, we are already almost at peak capacity.
Okay. And yeah, another question on ODUs. So why did we only increase our capacity in ODUs and not in IDUs as well?
So IDU we have a capacity right now of 8 lakh units, and ODU we have a capacity of 2.5 lakh, which we just recently increased to 4, and we want to go to 6 this year because the requirement of number of sets is increasing.
Correct. So eventually the gap between IDUs and ODUs will be reduced, right?
Correct.
Okay. And in the IDU space, do we still have some space with the Voltas to grow our capacity from here onwards?
IDU, yes, but this year I think we are okay. Next year we still have to get a firm plan. Based on that, we will take the side.
Okay. Now, so what I wanted to ask, so if we want to increase our IDU capacity, do we need to think about going ahead and acquire another client other than Voltas? Is there a saturation point for Voltas with this 8 lakh units?
There is, not as of yet. I think there is still more potential to go forward. But for us, we'll have to do a full new capex, because in the existing facility we are already maxed out at 8 lakh units.
Okay.
So it is a cautious step for us also, because we'll have to plan another 6 to 8 lakh units, and we cannot plan an increment of maybe 1 to 2 lakh units.
Okay, fair enough. And you mentioned this 60 crores of capex which we are going to spend in this year. How much portion of that would be going towards refrigeration?
About 25.
25 crore. Okay. And what is the asset turn of this business?
Commercial ref asset turn is almost 5 to 6 times.
Okay. And for gross margins, if you can help.
EBITDA margins about 11 to 13 or maybe 12% roughly.
Okay. So it's in line with our lighting business, more or less.
Correct.
Okay. Fair enough. Thank you so much. I'll join back in.
Thank you.
We'll take the next question from Priyansh Dalmia. Priyansh, you can go ahead.
Good afternoon, sir. Can you throw some more light in terms of the EBITDA margins product-wise? That would help.
So, lighting business is about 12% EBITDA, 12% and higher, 12-13%. IDU business is about 9-10%. ODU business is 7 to 8%. And component business is also higher, is about 12-13%, 14%. And commercial ref, like I just mentioned, is about 11-12%.
And how about the toys and the water filtration, sir?
These are under components. Components, toys also for us right now is under components. So about 12 to 14%.
And what kind of numbers are we talking about in terms of toys and water filters as of now?
Water dispensers and toys put together in this financial year, I think about 8 to 10 crores.
In FY25 you are talking about?
FY25, yes. So that is why it's still a very small portion.
And sir, in terms of refrigeration, what is the number expected for FY25 in terms of refrigeration pure play?
In terms of
You are saying that
refrigeration,
you are
in
saying that
FY25,
we are yet
we
in
are
talks.
looking at a 30 to 50 crore top line from commercial ref. Because we'll start commercial production only towards the end of the financial year.
Yeah, so ramp up is going to take time in FY25 because we have not finalized with the.
So customers are on board, but yes, there will be samples and then pilot runs and then mass production, and then for manufacturing also to gear up, you need some time. So next year, of course, we will look at a much bigger number. We will look at almost 150 to 200%, maybe more growth in that particular segment because we get the full year and also the quantities increase. But for the first year, we are taking a conservative view and we are saying about 30 to 50 crores.
FY25, 30 to 50 crores is what we are looking at. And how much is the capex that we have done in the refrigeration space as of now?
So the total capex that we will end up doing is about 50-55 crores.
And probably 2 years down the line with a 5x, we can expect 250 odd crores. Is that possible?
More maybe. 5 to 6, 300. We'll have to do a little bit more investment. Doing 500 to 600 crore top line in the next couple of years.
Okay, and that would be a brownfield thing.
Hello?
That would be in the existing facility only.
I am getting some disturbance. Hello? Am I audible?
Sir, he's confirming
Yes.
if that will be from the existing facility only. Hello?
I'm just asking, sir, that would be from the existing facility only, no?
1 second, I think he's got disconnected.
Hello? Yeah, extremely sorry. I am facing some network issue.
Sir, just hold on. I'll have to restart the recording. Just hold on.
Yeah, please.
This meeting is being recorded.
Yeah, Priyansh, can you go ahead and ask your question again, please?
So I was just asking, the capex that you're talking about in the refrigeration space is going to be brownfield only, no?
Whitefield. Greenfield, sorry.
Greenfield.
It is a completely new capex, yes. In a new location.
No, the further capex that you're talking about. What is going to be the capex in the next 2 years per se?
Right. That will be a brownfield capex, yes.
And what is the overall number of, say, FY25 and 26 that you're talking about? When you talk about 60 crores, and then you're talking about 500 crores.
So 25, 26, we are looking at a number of about 150 in commercial ref. And 26, 27, we are looking at a number of 300 plus.
I'm talking about the capex, sir.
Sorry. So capex, total capex is about 80 to 85 crores, out of which 25 was done roughly last year, 25 we do this year, and about the balance 25, 30 in the next 1.5, 2 years.
Okay. So all in all, 80 odd crores type of capex.
Correct, yes.
And we are almost there in terms of getting the capacity agreement done.
Yes, we are. In the next 2 months, we will sign off. We will probably POs and everything will be in place by end of August or early September.
End of August. Okay. Thank you, sir. That's it from my side.
Thank you.
Just to answer the previous participant's question on the equity share post pref, it comes to 2.59 crores. We'll go to our next participant, which is Rishi Kothari. Rishi, you can go ahead, please. We'll move on to the next participant, Pradyuman Singhania. Pradyuman, you can go ahead.
Hello, am I audible?
Yeah, Rishi.
Yes, you're audible.
Yeah, sorry, there was some disturbance from my side. Just wanted to know that right now the industry is going around on the order of 20-25% of CAGR, right? And we are claiming that for next 2-3 years we are going to grow at for 40-50% of growth rate. So how exactly are we? We are claiming that we will be increasing our market share among the players that we are working in the industry right now. So how exactly are we planning to, gain that market share? What exactly different that we are doing compared to any other player in the market?
So a couple of things. One is AC business. The growth in the audio side is going to give us a good growth overall. So AC business market growth and increase in audio production will effectively give us anywhere between 25 and 40% growth. The other businesses, lighting business is growing faster. Business is growing at almost 60-70% year on year. And the newer businesses have a zero base. So there, whatever growth is there is getting added to the overall growth. So, and component business also, whatever is growing on a very small base. So there also the growth rate is much higher. Effectively, if you see, there are two strategies that work in tandem. One is growth in AC and plus growth coming from new segments. And hence, we believe we'll be able to achieve that growth rate.
Okay. And in terms of the margins, if we talk about, we are seeing PAT margins have been, for last 2-3 years, it has been more or less decreasing way. Let's say to 2.2, 2.3%, it has come to around 1.8% around. So what exactly is the reason? Are we just because of the interest costs that we are being incurred on every single year increasing basis, or is there something else? It's because of the competition in the market.
So interest and depreciation, like I mentioned, we are doing a WDL depreciation, which is why our depreciation is almost 18 crores this year. Whereas if we had done a straight line depreciation, our depreciation number would have been about 7-8 crores. So technically PBT would have increased by 10 crores. So because we are taking a bulk of the depreciation initially, that is why the PAT numbers are under pressure. But if you look at EBITDA, the EBITDA has been decently healthy considering the combination of products that we have.
Okay, and any specific reason of we are using a WDB method and not SLM method for depreciation?
We've been following it for a while now. That is why. Initially, the asset base was not so big. Hence, WDB made sense because it saved on taxes. But now depreciation is very high, which is why it is hitting our PAT. But effectively, it all boils down to, sooner or later that profit will come in the books. It is just a matter of sooner or later. So this is a more conservative approach in accounting.
So in a way, one of the reasons to use this WDB method is to save taxes on our books, right? So that's the more
correct.
And also in terms of the current interest cost, are we planning to decrease the current borrowings that we have on our books, or do we want to do the expansion or capex based on borrowings? What exactly is the future plan for that?
So with the recent fundraise that we did, we believe this year the interest cost will be slightly lower than last year, even after the growth coming in. So it will be similar or a lower number, irrespective of the growth. So as a percentage, interest cost will come down in the current financial year. But we are not looking to borrow a lot, possibly, but maybe 5-10 crores, or there'll be a marginal change in borrowing this year as well. There'll be marginal increase in borrowing, but not anything significant.
Okay. Got it. Thank you.
Thank you. We'll take two questions from the chat members first. I would like to invite Naitik Mutha to ask this question. Naitik, you can go ahead.
Hi, thanks for taking my question. My first question is just, I missed on the part where you mentioned the capacity utilization of the current segments. If you could just repeat that, that would be helpful.
So IDU capacity utilization, we are almost at 75-80%, and ODU we are a blended capacity utilization of about 50%. Yeah, that was.
And the lighting?
Lighting 65-70%.
And components would come along with lighting, or that would be separate?
So components, it varies from component to component. It is not. Very difficult to quantify in general. But as of now, we do not have too much spare capacity in components. That is for sure.
Okay, got it. And my second question is if you could throw some light on how would our working capital change, when we add this new segment of commercial ref?
Commercial ref working capital is expected to be similar as to what it is in AC right now.
Okay. And at a blended level, will that make any changes to the working capital at a company level?
We are looking to improve it slightly. Then we are hoping that we'll improve it by about 5-10% on the current level, but not a significant change.
Thank you. That's it from my side.
Thank you.
Thank you.
We'll go to the next participant, Tanesha. Tane, you can go ahead. Yeah, hi. Thanks for the opportunity. Just had a couple of questions. So obviously, I just wanted to understand how the volume growth would have been in, let's say, April and May, given we've had a strong summer. So that will give some sense on how the first quarter would be. And my second question would be is to, how do we expect our growth to continue, given that, we have some sort of planned concentration with, one particular customer and they have their own capacity coming up, and the sort of doubling the capacity. So and then that is also being affected on the other assembly assembly players. So how are we expecting that sort of growth going forward from the RAC segment?
So far our discussion, I'll take the second part first. So far our discussion, our capacity is sort of is considered in their plan. So I don't believe because we are almost a dedicated vendor to them as of now. So our capacity is part of their plan, is our understanding. And based on the projections that we have from them, we don't see a challenge in terms of capacity utilization for this year and the next year. That is point number one. Point number two, about capacity, you said, so can you repeat your first part of the question, please?
Yes, just wanted to understand how the volume growth has been in April and May, given that we've had
Correct.
strong summer.
Yeah, so April and May normally is good every year. And this year also we have, this year June is also looking to be really good, which is not normally the case because June onwards the sales start declining. But this year we are expecting a good June. So overall the June quarter is expected to go better than last year.
Got that. So I think you're looking for a strong first quarter, obviously, and then kind of tapering off mid-year, and then we pick up again in fourth quarter.
Correct.
Got it. Okay, thanks. We'll go to the next participant, Ashil Shah. You can go ahead, please.
Yeah, hi. Just a couple of questions. One is how diversified are we expecting the commercial refrigeration business to be? In terms of
commercial ref, we are any particular customer, we are not expecting more than 30-35% of the business share.
Okay, got it.
So there'll be two anchor customers, and then there'll be 3-4 smaller customers. So anchor customers will be anywhere between 25 and 30-35%, and then 2-3 smaller customers. So overall, about 4-5 customers.
Okay, got it. And will any of these anchor customers will it be Voltas only?
No, not Voltas. Voltas has their own commercial ref facility, and so they are, I think, self-sufficient in commercial ref.
Okay, got it. And sir, I believe that generally, the brands or the OEMs come, I think, around April, May, and give you a forecast for the entire year. What they kind of expect you to support them with. Has that already happened?
That happens in July, August tentatively, because so far we have not exited the last season. Okay. But we've had a preliminary discussion with regard to the next year, which is already in place. Yes.
Okay, got it. And the discussion that was that was had with you with respect to your OEMs, was there any difference compared to what was expected? Like whatever the guidance they would have given you the previous year, has there been any change to that, or it's pretty much in the same lines?
It's same lines.
Okay, got it. And so I think this half year, H2 on H2, there was little bit lower revenue growth compared to the volume growth you had. because of the pricing coming down on the AC side. Are we seeing anything out there? Like, has that stabilized? Is that continuing to go down? How is that?
So that depends a lot on the LME prices. So LME prices last year were very high in the first quarter, and then they fell. So there was almost a difference of about 15% at the product level, 10 to 15% on the product level. And this year they were very low, but they are at the peak now. So the material was bought at a lower price, but now this maybe next quarter onwards, prices are expected to increase further. So price is not really a function that we control. It depends on the raw material price. So it's very difficult to predict whether it will go this way or that way. That's not really in our hands.
Okay, got it. And how does it work in terms of your, EBITDA margins? Like if LME goes from bottom to top in that quarter, do we temporarily have more margins or less margin? How does that part work?
So we have a quarterly pricing structure with our customers. So the pricing gets quarterly reset based on the average of last 3 months. So effectively it nullifies over a period of 2 quarters. I mean, so every quarter it nullifies effectively.
Okay. Got it. So if it's going from peak to bottom, then that time there might be a temporary up move in the margins, and then by next quarter it will get nullified.
Correct.
Got it. And sir, how big are we expecting the water dispenser business to become? Because I think right now it's very small. Are we thinking it will
Water dispenser as a category over the next 2 years can be a 50 to 100 crore category for us. But the good part of water dispenser is it is a gateway product for a lot of export customers. So it comes under the commercial ref category. So it can help us get into export customers for that segment also.
Got it. But sir, I think in AC business, it's very difficult to do exports. I think from whatever I understood, you need to get a lot of qualifications and all of that done. Is it similar in commercial ref or is it, easier?
Commercial ref is easier. Actually, AC, apart from certification, every country does not require certification. For example, African market is not certification driven, but it is driven by a sheer price competition. The challenge that is there in AC is that AC installation and service is a big component. So it is, and also the life expectancy of an AC is anywhere between 5 and 10 years at the customer level. At a commercial ref product or a water dispenser product, they are a plug-and-play product. And because they are in commercial use, because of rough handling, the life expectancy is 3 to 5 years. So, and they are not normally serviceable. If they are mishandled or they are roughly handled, they end up being discarded. So the rotation cycle is much faster. So it is much easier to sell commercial ref than air conditioners in any country because service requirement is much lower.
Okay. Got it. And so last question from my end, a lot of the competition has started getting into the washing machine business. I think Amber Enterprises and I think one other player have decided to set up washing machines. Is there any reason why we are also not going down that route?
We are planning to get into washing machine. I mentioned earlier on the call. We've not finalized, but it is on the roadmap, yes.
Okay, got it. Thank you, sir. That's all I have.
Thank you.
Thank you, Ashil. We'll take the next question from participants who still not asked questions. Miksha, you can go ahead, please.
Hi, good afternoon, sir.
Good afternoon.
Yeah. So my question is on the interest part, that our interest expense is currently coming to 17-18% approximately. So are we still continuing the bill discounting thing or any further plans to reduce the working capital days in future?
So we are bill discounting currently, yes. We are 17-18 crores, not 17-18%, ma'am. So working capital, like I mentioned, overall working capital as a percentage will come down this year. But we will continue to balance between using CC limits and invoice discounting.
Yeah, I'm talking about the average interest rate on the borrowings that is coming approximately 17.
Right. Right. That seems higher because of invoice discounting. Our rate of interest is nowhere so high. Our rate of interest on average is 9 to 10%.
Okay.
Borrowing rate of interest.
Okay.
But because the debt that you see is net of discounted invoices, that is why as a percentage it seems higher.
Okay. And one
But
last.
yeah, and
Yeah,
it is
you can.
expected to come down this year. Yes.
Okay. And one last question: how are we planning to use our QIP proceeds?
So working capital and capex primarily.
Oh, thank you. I'm done.
Thank you.
Thank you. We'll take the next question from Sachin Gajargaonkar. Sachin, you can go ahead. Sachin, your line is unmute. Please go ahead. I think there's a problem at his end. We'll take the next question from Ranodeep Sen.
Sure. Thank you for the follow-up. So we wanted to understand, if I'm not wrong, Western Refrigerator, they are at around 27% EBITDA margins. And I understand that comes with years of scale, right? So
Correct.
in the long run, given we are focusing in a big way in this space, in the long run, do we see this kind of margins coming in from the sector?
Not so high, maybe. We can aspire to be around 15 to 18%. But until unless we go into direct distribution, I don't see margins of 25% plus. But 15 to 18% is doable considering a blend of variety and customers.
Sure. Appreciate that. One last question. This is at a macro level. So we are doing as a country 10 million ACs, whereas China,
Correct.
on the other hand, exports only around 110 to 120 million. On the call, you mentioned that the challenges that comes when it comes to export, primarily installation and servicing. So I'm just trying to understand, how is China able to kind of crack this juggernaut? And is there a way forward that we are also looking at exports of AC in a big way?
Right. So I was saying comparatively, as compared to commercial ref, AC is installation commissioning heavy, service heavy. So it was a comparative statement. But it is not that we cannot service ACs or we cannot supply spares to international customers. But there you need to have a local tie-up with somebody who can help you in executing the installation commissioning for air conditioners. In freezers, it is not like that. Also, second part is in air conditioning, you need to have a continuity in business because you'll need to keep servicing the parts. In commercial ref, if your customer wants to change the buyer, it is easier. If they want to switch from China to India, they can do it much faster because that continuity is not required. So, of course, it goes both ways. Getting and losing customers is easier and faster in commercial ref. And in AC, it's a longer process. That is point number one. Point number two, so in ACs, what we are doing now is we are now exploring more and more products that we can export. And we are also looking at variants of ACs in the sense that there are niche products for cooling on the heat pump technology. We are exploring those products also if we can develop a niche in that segment and export. So getting an entry into the export market is the more important part, and then you build on the market and then you scale. So apart from the other hurdles, because if you go into the vanilla products which are present in the market, the price competition is very high. And it takes you have to sort of beat China in pricing and in variety to be able to get into that market. So we are also developing one product for which we are expecting an order in the coming week, where we will start exporting a product to Middle East, which is more of a niche product. And once we have 2-3 such product categories, then we can keep building on that segment. So we are actively working in summary, we are actively working on export. And I think this year our export number is, we are expecting at least 2-3% of our sales to come from export. And if that happens, we'll continue to build on it in the coming years.
Sure. I appreciate the detailed and the macro perspective. Thank you so much.
Thank you.
Thank you. We'll take the next question from Manan Madlani. Follow-up question.
Yeah, hi sir, thanks for the opportunity again. So you mentioned the June month or the let's say first half will be better than the last year. So on the margin front, do you think is it possible for us to increase our margin?
EBITDA levels in the existing segment, not really. Because like I said, pricing is quarterly pass-through. So slight change in volume will, I mean, some change in volume will have a minor impact, but not a significant impact. No.
Okay, because we are increasing our capacity in ODUs, so eventually it will impact our margins.
Correct. Yes.
Okay, so I guess it will be less than 10% then.
It will be, yes.
Okay. And on cash conversion cycle, can you tell me how many days were there for this year?
I don't have the figure in front of me. Sorry.
Okay. So whatever the number will be, it will be less in this year.
We are planning to, yes. We are targeting to reduce that number consistently. But I don't expect a significant jump because all the products that we are in, and if we are working with domestic customers where payment terms are 60 days or 75 days or whatever they may be, so it will continue to be on similar lines.
Okay. And the last question is on the lighting side. So have we done any non-compete agreement with any of our client?
No such agreement in any segment.
Okay, so are you planning to go into B2G side with the lighting going forward anytime?
We are exploring, but as of now, we don't have anything on hand.
Okay.
But if we get an opportunity, we'll definitely do it.
Okay, fair enough.
If it is a safe enough opportunity.
Okay. Yeah, thanks. That's it from my side. I wish you all the best.
Thank you so much. Thank you.
We take the follow-up question from Harshil Biyani. Harshil, please go ahead.
Yeah, hi. Sir, my question is on in the investor presentation, you have mentioned that company has started pilot production for electronics and controller required for EV charger. Can you give a brief about that? That what are the exact products and
so we are doing it for a company who's making EV chargers. So we are making some circuits and boards for them. So they are at a development stage, and we've done some pilots. As they scale up, we'll probably make and supply some controllers to them. But it is still early. Let's see. We are trying to explore what are the opportunities in that space, and if we can do something on the electronic front. If the opportunity grows, then probably we can also explore further growth in that segment. But it is right now exploratory.
So can we say that in FY25 or 26, it will be like commercially started and scalable?
Too early to comment. Maybe in a few months, I'll be able to give you a better picture.
Understood. Okay. And can you give a brief about our competitors? Like who are the big players and what are our rankings in terms of capacity in ACs visually?
So in AC, I mean, Amber, from what I know, is about 20-25 lakh sets as a capacity. PG has recently increased their capacity. I don't have their exact numbers, but I think totally they can do about 10 to 12 lakh sets is what I understand. EPAC is at 8 to 10 lakh sets. Of course, please don't quote me on these numbers. I'm not sure about. These are my approximations.
Yeah. You're on a con call, you're getting quoted anyway.
I mean, in the sense, you don't hold me to these numbers. I don't know these numbers. So, and blended, our capacity is about 6 lakhs, which we plan to increase to about 7 lakhs this year, net blended. And so probably at number 4, as of now, is my understanding in OEM and ODM segment.
Understood. Yeah. So this is like current capacity. So post expansion will be growing.
I mean, I believe I've considered their current capacities which are getting commissioned, but I don't know the exact numbers.
Understood. So our share in AC production would be like, say, around what percentage it would be?
If you look at the total market of 10 million and we are doing about 0.5 million, then we are about 4% or 0.4 billion, so 4% roughly.
Understood. Yeah. Okay. And in one of the previous questions, there was a question about warrant. So post conversion of warrant, what would be the promoter shareholding? And is there any further
57.
plans of? Okay. And is there any further
57%.
plans of dilution or fundraising in coming future?
Not as of now. Not as of now. Not in this financial year.
Understood. So this 57% is post warrant conversion.
Post warrant, yes.
Okay. Sure.
56 or 57 somewhere.
Okay. Thank you.
Sachin Garjankar, is your sound resolved? You can go ahead and ask the question. We are unable to hear him as yet. We'll take the last question for the day from Ashil Shah. Ashil, you can go ahead.
Yeah. Hi. Another question on the washing machine part. A couple of guys are getting into washing machines, including players larger than you, and people who already have washing machine capacity are expanding. Just wanted to understand, why is there some reason that is something changing in the industry? Has someone vacated the industry? Why suddenly so many people are trying to set up capacity?
So washing machine as a product is also growing pretty rapidly, and the entry level semi-automatic washing machines, I think the demand is very high. Further, another advantage or requirement that customers have is to have a regional tie-up for supply of washing machine, because it is a bulky product and a low value product. Nobody wants to transport it from one part of the country to the other part of the country. Most of the manufacturing of washing machine in India is saturated to the north part of India, and hence we believe we have an opportunity.
And how much of it is currently imported washing machines?
I don't believe semi-automatic machines are imported as of now. I think the import has stopped almost completely since last year.
Okay, so the advantage that we have in washing machines, why we think we can crack, is because of location, being in the west.
Location. And once you start washing machine, it is a more or less standard product in terms of semi-automatic washing machine. So it is a constant sort of business.
Okay, understood that. And is there any like when we get into the space, is there any difference of scale it takes to do stand front load or top load, or we'll be able to do both with same facility?
So we are right now doing semi-automatic, which is a top load machine. So semi-automatic top load is the simpler out of the three. So in difficulty, if you say semi-automatic top load is the easiest product, then is the top load, and then is the front load. So front load is the most difficult product in terms of requirements and line capabilities and everything. So migrating from semi-automatic top load to automatic top load is doable. It requires some additional capex, but not a massive capex. Front load is a completely different setup.
Okay, got it. And so last question from my side, 2.59 crore shares you mentioned outstanding post the the pref. Is that including the warrant conversion?
No.
Yes,
After
yes.
warrant, it will go. No. This is pre-warrant.
2.59 plus warrant will be 2.9 crores.
Correct.
2.9 total post warrant. And how much cash would come in at the warrant conversion? Over and above what's in our books.
About 30 lakhs into about 50 crores, if I'm correct. Just let me.
57.
57. To be precise.
57 CR. Okay, got it. No, that's all I had. Thank you so much.
Sachin has sent his question on chat, Sukrit. Hi, sir. Is there any plan to move from SME to main exchange?
We are in the process of applying. Actually, the paid up capital of the company has increased from 25 crores, which is why we are mandated to move. So we are in the process of doing the application. Once we apply, we will know if the exchange approves it. But if they approve it, then in the next couple of months, we will probably migrate to the main board.
Sure. So that is the last question for the day. That brings us to the end of this conference call. Sukrit, do you want to give any closing comments?
I thank everybody here again for taking the time and joining the call. I hope we've been able to answer most of your questions. And we continue to thank all of you for being part of the company. And we hope we can continue growing with all your support and the hard work of the team and support from the customers. Thank you so much.
Thank you, Sukrit, and thank you to all the participants and the management for joining on this call. This brings us to the end of the conference call. You may all disconnect.